Hey there, Singaporean investors. Tired of sifting through endless news, trying to figure out what truly matters for an SGX portfolio? Welcome to the Investing Iguanas Daily SGX Market Digest for Wednesday, September 10th, 2025. Ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 1 million reads, 58,000 likes, and 600,000 plus watch hours across 1,000 plus videos as of August 2025, this channel cuts the noise and brings clear, actionable intelligence with regional context baked in. The Straits Times Index traded just off record territory, easing about 0.2% to 0.3% from recent peaks around the 1300 handle as regional sentiment cooled, even while Singapore's safe haven appeal and steady macro backdrop remain supportive in the medium term. The STI recently printed an all-time high near 4,020, but today's tone was cautious with a modest slip as profit-taking met mixed regional leads despite constructive U.S. closes overnight. Over the past month, the index remains up roughly 1% to 2%, underscoring resilience. Investors are rotating within defensives and financials while digesting stock-specific catalysts on the tape. Now let's zoom in on Fraser's property. The group announced a strategic leadership update in Thailand. Lim Hua Tiong, CEO of Emerging Markets Asia, will assume the additional role of CEO of Fraser's property, Thailand, effective October 1st, 2025, aligned with the One Fraser strategy to drive synergies and long-term value across key markets. The counter previously closed at $4, down 2.8%, or $3, as investors weighed leadership transition timing against execution momentum in Thailand and broader regional pipelines. Lim's current remit spans China, Thailand, and Vietnam, and he also leads One Bangkok. The expanded scope suggests deeper integration across platforms and may streamline capital allocation and partnerships in the Thai market. What does this mean? Execution in Thailand is the swing factor. Leadership continuity could tighten alignment in mixed-use, industrial, and township pipelines, but the market will seek early proof points on project milestones and returns as the role expands. Another stock-making headlines is Singapore Post. Alibaba Investments sold 151.3 million shares for $64.4 million at about $426 apiece, cutting its stake from 11.33% to 4.61% and ceasing to be a substantial shareholder, an overhang that priced below the prior close of ZR45s. The counter ended down about 1.1% on the session tied to the news flow, with investors parsing whether supply is cleared or if further rotations could weigh on near-term sentiment. Historically, Alibaba stepped in at much higher prices years ago. The latest move extends a multi-year divestment pattern and resets the register, which could open room for new strategic or institutional holders over time. Key takeaway: removal of a large legacy holder can be a double-edged sword. Short-term price pressure versus cleaner ownership dynamics. Watch liquidity, any block follow-through, and operational updates on postal transformation and e-commerce logistics. HRNet Group expanded into Vietnam via a new wholly owned subsidiary, Always First, focused on professional recruitment and growth sectors, especially IT and tech, tapping one of Asia's fastest-growing economies and an accelerating tech ecosystem. Shares closed flat at $71 months before the announcement, consistent with a wait-and-see stance as investors assess time to revenue and margin mix from higher value placements in a new market. Vietnam's tech hiring tailwinds are real, but scaling consultant productivity and enterprise relationships will determine whether this adds durable growth without diluting returns. LHN said its space optimization business remains a major revenue contributor. As of June 30th, 2025, it managed over 330,000 square feet under commercial properties and over 1.8 million square feet under industrial properties, supporting recurring income visibility. SGX also declared subsidiary Kaliwu conditionally eligible for a main board listing, and LHN provided an update on the proposed spin-off. Shares ended up sterling 25s or 3% at $86 on the day. A Kaliwu listing could crystallize value and provide fresh capital for expansion of co-living assets, though final terms and post-listing performance will shape the sum of parts upside. Today's mix: leadership realignment at Fraser's property, a major register reset at Singpost, and expansion/spin-off angles at HRNet Group and LHN. Highlights how corporate actions can dominate stock-specific returns even when the index drifts sideways near highs. The most crucial takeaway is the growing role of ownership dynamics and portfolio strategy. Stake cuts, spin-offs, and cross-border leadership alignment can reshape risk-reward faster than macro headlines, so keeping a live watch list of corporate actions is essential. Strategy-wise, maintain a diversified core while targeting event-driven edges. Monitor Fraser's Thai execution milestones, Singpost's order book, and any new cornerstone interest, HRnet's Vietnam client wins, and LHN's Koliwu listing timeline for potential entry or add-on decisions. That's the scoop for the SGX today, Wednesday, September 10th, 2025. For real-time analysis, urgent insights, and a daily heads-up to a week early, join the premium membership for just $3 a month. Think of it as a daily dose of market foresight straight from the desk. Ready to stay ahead in the Singapore market? Click the link in the description to become a member. Don't forget to like, share, and drop a comment with thoughts on today's moves. Every comment gets read.